Hello and welcome to IBTimesTV. I'm joined here today with one of our in-house reporters, Mike Obel. Mike, today is the first day of the third quarter, so how is gold doing?
Gold, I'm happy to say, is up a little bit. It just came off its all-time worst quarter. It has fallen more in this past quarter, the second quarter, than it's ever fallen before, but today it's up. At one point it was up over 2%. A lot of things are up today. Stocks are up, oil is up, but gold certainly is up. Some of those gains they've tapered back, so now it's only up about 1.5%, but that's pretty strong for gold.
And so why is it up today?
It's up today for a variety of reasons. One reason is there has been a series of reports, economic reports around the world by a private outfit called Market. And Market produces these reports by surveying purchasing managers about the state of the manufacturing business. And the general upshot, the general result of these reports today has been that manufacturing globally is better than people thought. When manufacturing is good or is perceived to be on the upswing, that's bad for the dollar. And this is at the heart of the matter, Sally. What's good for the dollar is bad for gold. What's bad for the dollar is good for gold. And a strong manufacturing sentiment is bad for the dollar and therefore good for gold. So that's a big part of what's happening today.
That's easy to understand, but is it going to be, can it continue to rise, or what's it going to take for it to kind of be sustained at this level?
Yeah, I guess you're asking, is this a dead cat bounce, as they say, sort of gruesomely? I have no idea, but there are things that could pull it one direction or the other. One thing that could sustain today's growth is if there is bargain hunting. In other words, we've come off over 30% from the high of 2 years ago. In September of 2011, gold was selling for $1,921 per metric ounce. Today, it's a little over $1,200. Friday, last week, it actually touched $1,180. It's a phenomenal dip, and that could stimulate some bargain hunting. There's evidence of that already. One kind of evidence comes from China, which is the world's second largest gold buyer, and they are responding to the reduced price, especially buying physical gold. People can buy gold as securities, either stocks or ETFs, but in China, they're buying physical gold. If that continues and it spreads to retail investors around the world, you might see this sort of thing be sustained. Another thing that could make this continue is dollar weakness. And as I mentioned, when the dollar's weak, that's good for gold. On the other hand, there are things that could kill it off. And one has to do with the Federal Reserve. If the Federal Reserve were to begin to reduce its monetary stimulus, that is essentially money printing in the United States, that would cause interest rates to rise. When interest rates rise, it lifts the value of the dollar. It has the psychological effect of making investors think, gee, I can jump into a treasury or other kind of bond and get a higher return than I might get if I bought and held gold. Probably one of the biggest things that will near term that will determine whether or not this can be sustained is the Friday jobs report in the United States for the month of June. If the jobs report is strong, it would be construed as an incentive for the Federal Reserve to chill on money printing, meaning the interest rates rise, which helps the dollar and hurts gold. However, gold would be assisted, lifted, strengthened if Friday's jobs report comes out weak.
Okay, perfect. Well, that's great insight, and look forward to seeing what happens with gold next. Thanks,
Me too.
Mike.
You're welcome.